नमस्कार दोस्तों, आज के इस एपिसोड में we'll be busting a popular myth related to the indices of U.S stock market. While there are around 5,000 indices in the US, some belong to a sector or a commodity specifically, and some others such as S&P 500, Nasdaq Composite or Dow Jones represent the US stock market almost as a whole. We'll cover them in just a bit. But first, we'd like to break down the definition of indexes or indices for you and how it can be commonly misunderstood. Indexes हमें पूरे stock market का एक लिहाजा देते हैं. It's similar to a national weather report, just that its complexity is high because of the thousands of stocks involved. As these stocks would be very difficult for anyone to trace single-handedly, an index gives a good measure of the stock market ecosystem. Having said that, we often hear on the internet that major indexes such as S&P 500, Nasdaq Composite and Dow Jones go hand in hand. Matlab, investors use one of these as a reference for predicting future trends of stocks from other indices. For example, over the past 15 years, the Dow Jones has had a 97% correlation with the S&P 500. Correlation यानी कि दो indexes के उतार चढ़ाव के बीच में समानता. Similarly, Nasdaq's correlation to the S&P 500 was 95%. All that is great during the normal, but it has all changed during the COVID crisis, which challenged popular knowledge. Last year, the Dow Jones and S&P 500 lost 9.2% and 5% respectively, while you won't believe it, the Nasdaq shattered records with 7.4% returns and an all-time high. At Stockal, our experts cut down on such risks by preparing for worst-case scenarios with our in-depth analysis. It is possible for investors to gauge how the stock market would behave, but it takes an enormous understanding of the indexes. So, without further ado, we'll now glance at the three top indexes of the US stock market, where first up comes the Dow Jones. The Dow Jones Industrial Average, also known as Dow Jones or simply Dow, is the oldest American index which originated in 1896 and still consists of 30 stocks only. While it may be old-fashioned, it works its charm uniquely, as stocks in this index are factored mostly by company reputation and investor interest. So this index is full of highly priced stocks. When an index is made up of such stocks and consists of just 30 of them, this could be risky, right? But statistics tell us a different story. In the last 15 years, Dow Jones's blue chip stock companies have performed so well that this index has had the highest dividend yield of 2.4%, better than S&P 500 or the Nasdaq. So what's the big deal about Nasdaq Composite? This is the first fully electronic stock exchange. It tracks about 2,700 stocks that trade on the Nasdaq exchange. While most of its stocks are fast-growing businesses, it is no surprise that around 40% of this index consists of tech stocks, including the FANG. To know more about FANG, click the link on the top. The flip side of Nasdaq Composite's growth is seen when the fast company growth runs out of steam. Now, such a thing is rare and hasn't happened in over 15 years, but it is important to not forget the 2002 bear market. It was during the dot-com bubble when this index crashed by 78%. Finally, we come to S&P 500. The S&P here stands for Standard and Poor and is a true barometer of the US economy and equity market. The 500 here indicates the number of companies under its umbrella. However, it actually holds 505 of the largest US stocks based on market cap. The S&P 500 covers 80% of the US stock market by capitalization. Because of its more diversified approach to tracking the stock market, it is the preferred proxy for the broad US stock market. So, those were the three major indexes with their own unique features. It is best to invest in understanding them before investing. If you still have any questions, you can comment below. To invest, you can download the Stockal app from your Android or iOS device.